Good morning, everyone. Welcome to the European Crossover webinar. And as you can see, we don't have any European data of any significance today. We don't have anything coming in until 7 a.m. Eastern, which will be Mexican data for private spending. And then at 8:30 Eastern, we will have National Activity Index for here in the States and Canadian New Housing Price Index at 8:30 Eastern. And that's going to be it for data. So no measurable data or significant data here in the European time zone. Take a look at the euro dollar. We actually pushed up back here towards this resistance, which is 1870. You can see the market's starting to pair back again. My analysis is pretty much in line with that, looking for a pullback in light of what we're seeing, which is this new increase in coronavirus cases in Europe. I made a comment about that on the Friday chat and then posted on Twitter this weekend, well before the market had opened. I'd seen that story on CNN and thought that was because we had rallied, although we had the opportunity to push even higher, let's say, i.e. in the euro, but I thought that would potentially quell the appetite of bulls and maybe we could see this market pair back. And I think we're in the middle of that, not in the middle, but in the very, very early stages of starting to see the market will be open or conducive to a pullback. You're seeing the same thing here in cable. We can take a look here on the Aussie dollar. Also a pair back in the Aussie dollar. Put on here that the dollar CAD, I think it's open to move a little bit higher, and we are moving higher here. And I really wasn't that big of a fan about the dollar CAD because really it hadn't done jack all the prior week. But once again, I think this is more about just a rotation out of some of these other pairs and seeing these others react more favorably on the dollar pair as opposed to the cable, which we know it has its own problems, but also some of these other ones that are being impacted, i.e. the Australian dollar, as well as the euro and other pairs. Taking a look at indices. We have seen a pullback here, and we did see that bounce off of those lows after they announced that there was going to be a meeting, not a meeting, but an announcement about the vaccine, which was a bunch of BS. But anyway, we had rebounded off of that, and then I think the market did want to pair back, but once again, Trump had delayed the announcement or the start of the presser for so long. There really just wasn't much time there to go on and fade it. I even noted that on Twitter, and so you just basically the market just sat there. And so henceforth now, once we got into the Asian session, we started to rotate a little bit lower. We did see an okay bounce back off of this 1829 or 10829 in the NASDAQ, only to come into the same day VWAP and struggle and open another test. And we've just about made it. We almost tagged it down here, 10,791 and 10,796 actually would be the 78%. I think that we would have to come down here. I just don't know how much more follow through we'll see on this, but I think they would have to test that on Monday. I mean, coming into the States. If you look at the S&Ps, they've also taken a dip down here. Take a look on a 2-hour chart. Actually, we're coming close to, remember I discussed that on the show with Dale. This is the VWAP off of the June lows. And one of the things I discussed or pointed out in the show was I thought that if we took out the prior Friday's closing week low, which I think was at 33.30 or 33.25, that I thought we'd make a beeline down here for 32.50, which is the VWAP off of the June lows, and certainly looks like we're going to potentially make a move down there. And I think we probably may end up finding some buying. Probably, I would think the market may be a bit stretched at that point. So that's something to keep an eye on for in the morning here in the States. So they may take that stab down there. That may weigh on all this here. So keep an eye on that. That may end up weighing, and we may end up seeing this come down here because once again, they, obviously they time everything against the stock market. Just notice that when they made the announcement, it was exactly when we put in the bottom. I mean, we were looking to continue to break, and then we saw the move back up as we all waited and waited and waited, which they already had all the news out. So it was just as I said, something that obviously you can tell was timed with the stock market, and then they pushed it far enough that there wasn't much time for anybody really to make a move to fade that move. So henceforth, the market just basically sat there. And then, of course, like I said, we came into Asia and then we started to fade back. And so I think they're going to want to test this. Maybe they may even go a little bit lower, but that is something to keep an eye on is the S&Ps at the 3250, the VWAP off of the June lows. We'll go on and take a look at the news. Just one story. The dollar slips and the yen inches higher as the Fed's rhetoric is in focus. That's a bunch of BS too. The dollar slipped and the yen and won led Asia's currencies a little higher Monday as investors looked ahead to a slew of U.S. Federal Reserve speakers this week and to a decision on the inclusion of the Chinese government bonds in a global index. Moves were slight and volumes light due to a public holiday in Japan. The dollar index, which tracks the greenback against a basket of major currencies, dipped to 92.77. The yuan rose to 0.3% each. Foreign Chinese bonds, bond buying has helped put the yuan on a tear, lifting it to nearly 6.5% in 4 months. Investors are saying the FTSE result will include China in its World Government Bond Index on Thursday, likely triggering even more inflows in supporting the currency. The asset under management tracking the assets under management tracking this index is big. So we are seeing some pre-positioning taking place, said Bank of Singapore strategist Mo Xiong-Sim. But it's not just the index. The bigger picture is that the Chinese economy is doing well, and there's an interest rate differential that's supporting the currency, and a Biden victory might provide further relief. The yuan edged back towards a 16-month high in Asia. The Aussie rose 0.4 to 73.19 to the top of its range of the last 4 weeks. The euro and sterling crept toward the top of the ranges they have occupied for a couple of weeks, with the euro last at 18.67 and sterling at 29.58. That's versus the yen. The yen looked to break new ground, extending a week of solid gains amid tepid trepidation about the global economic outlook and perhaps a shift in the yen's drives as central banks pin rates around the world at or below zero. The yen is up nearly 0.2, nearly up 2% in 5 consecutive weeks of gains. The yen is deeply undervalued on standard metrics. Private sector portfolio outflows appear to have slowed, and the Bank of Japan seems to have little appetite for more deeply negative rates. For these reasons, we see downside risk to our 12-month dollar yen target of 105. In the short term, analysts said the Fed's lower for longer commitment would drag on the dollar, though close attention will be paid to the remarks from the committee members this week for any major clues about the new approach to inflation. Fed Chairman Jerome Powell is due to appear before a congressional committee later this week, while the Fed committee members Leo Brainard, Charles Evans, and Raphael Bostic, James Bullard, and Mary Daly, and John Williams also make public speeches. The dovish Fed will remain a background negative to the dollar, said Terrence Wu, strategist at Singapore's bank. Powell's testimony on Tuesday will draw attention, but not for now. The Fed is likely done playing their cards, and that's it. With that, we're just going to go and move into the analysis now. I think we'll probably be able to fly through that too, although it's the analysis that sets it up for the week, so we'll have detailed notes on that, on all the pairs, including the cross rates. Bear with me when we move to that. So we'll start with the euro. So the euro saw a rebound from the dip to 1739 to close out this past week steadily. There is one concern for the bulls, and it's a return in strong numbers of the coronavirus, which could spark new lockdowns weighing on economic activity. This could also push the ECB in taking further steps. Despite the good technicals, I think the euro will be sold on rallies. Resistance will be 1870. You can see that's been the high right there for today. 1870 with initial support at 1787, followed by 1714. So 1870 and support 1787. Oh, we got that already. Followed by 1714. Let's go and move into the cable. Cable paired back on Friday from 1:30 with the second wave of coronavirus arriving in force among the contentious argue with the European Union or contentious argument with the European Union. The pair is open to a pullback. Initial support would be 2878, followed by 2814. I don't know why I didn't put resistance there. Bear with me. 2878 followed by 2814. We're already there at the 2878 right now. We're actually just below it. Let's go with the 2814. And resistance. We'll go with the 2923. Actually, this would have been a little bit higher. I'll go with the 2923. It's all for naught because we're here, but I think my resistance was going to be at the top of the closing bar, that which would have been 2974, which you didn't quite get to it. But you can see the 2923. We'll leave it there. Oh no, I didn't list that. And from there, let's go to the Aussie dollar. The Aussie held up well for the past week, but it's having difficulty with the 73.30 weekly level. There are new coronavirus concerns. The pair is open for a respite to pick up bulls at to pick up. I don't know why I said pick up by bulls at lower prices. Support will be 72.21, followed by 71.91. Bear with me. Onto the Kiwi. Kiwi remains strong, but posted a gravestone doji on Friday. Bulls may be open for a respite at these elevated levels. Support will be 66.85, followed by 66.41. You can already see they're making that push. They already came down. They're 67, but 66.85 followed by 66.41. Resistance will be 67.87. Onto the dollar CAD. The dollar CAD posted a positive close for the week, albeit in a relatively tight range. The pair is open to a rebound move based on the short covering. Resistance will be 32.68, followed by 33.34, and support will be 31.24. Onto the dollar peso. Wow, this thing is screaming. The dollar peso gave up the ghost on. I don't know why I didn't update. Doggone it, but it ticks me off. Because it didn't put the data. But my thought was is that we closed just right below the key level of 21.14, so the market was open to move higher. My support was going to be 21.08. So far, the low's been 21.04, 21.08, and that resistance. Bear with me. I know I had 21.28, but we've already blasted past that. So it would have been right there at 21.35. The next key level right now is going to be, man, this thing is flowing like a bandit. It's going to be 21.47. Holy smokes. This is way above beyond where I saw it going to. I thought we were going to rally, but I didn't think like that this quickly. Um, Onto the dollar yen. Man, this thing is still breaking them off. Dollar yen finished the week at new lows, closing at weekly level 452. Immediate resistance support is going to be 418, followed by 378. Resistance will be on a bounce at 532. So I had 418. I'll stay with that, although we are below it at this point. And resistance is going to be obviously in the fours. It won't go that high. We'll go with that close right there. Go with 493. On to the dollar index. Dollar index finished the prior week lower, but may be in a position to rally. Resistance will be 93.89, with a break above allowing to move to 94.70. Support will be 92.51. Onto the Kiwi yen. The Kiwi yen appears to be a bit stretched. The bulls need a daily close of 71.40 to spark for the buy, and support is going to be 69.88. And onto the euro yen. Okay, euro yen closed the week just below key level 24.01. The pair is open to a further pullback to 22.88, which will be support, and resistance 24.60. Euro odd. Euro odd rebounded to close above the prior Tuesday's close to suggest a bottom may be in place. Initial resistance will be 62.86, with support at 61.54. Moving on to Euro Kiwi. Euro Kiwi may have found a bottom on Friday, testing support at 74.43. The pair is open to a bit of a short cover to start the week. Support will be 74.43 with resistance at 76.37. And Aussie yen. Aussie yen remains vulnerable. Support to start the week will be 75.72. You can see that moving right here with resistance at 76.74. Guppy closed near the lows for the week. The pair has a volume value at 34.67, which will serve as support. And resistance will be 36.42. And lastly, we'll close out the door. Sterling odd. Sterling odd remains marked near the lows. The pair finds support at 76.49. With resistance at 78.66. And that's going to wrap it up for FX. We'll just take a look at the um, indices, which I'm trying to move into this right now because you can see here we're coming in close to the that VWAP from the June lows, and S&Ps is 3250. You can see the Nasdaq is pushing here, and as I mentioned earlier, I think we may just continue to stay weak until the S&P gets to that area, and we'll see how we react. So I'll get the bias chart posted into the room, and we'll see you there. Thanks for joining us for the European crossover webinar. Good luck trading.